This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Ministers from International Energy Agency, IEA, member states are weighing the release of 60 million barrels from oil reserves, two sources familiar with the talks said on Tuesday, to cool oil prices soaring from Russia's invasion of Ukraine. U.S. Energy Secretary Jennifer Granholm is chairing the extraordinary ministerial meeting of the Paris-based IEA, which represents mostly industrialized nations and has coordinated 3 emergency oil stock releases in the past. Crude oil was trading around $104 a barrel on Tuesday as some buyers shunned Russian barrels after Western allies imposed sanctions on Moscow, while supplies worldwide have tightened as economic demand has soared, with output struggling to keep up.
China's purchases of Iranian oil have risen to record levels in recent months, exceeding a 2017 peak when the trade was not subject to U.S. sanctions, tanker tracking data showed. The ramping up of the purchases by the world's top oil importer comes amid talks between Tehran and world powers to revive a 2015 nuclear deal that will lift U.S. sanctions on Iranian oil exports. The talks have intensified in recent weeks. A return of Iranian oil will ease tight global supplies and cool crude prices that have touched $100 a barrel following Russia's invasion of Ukraine.
Moving on to the top news in the energy sector.
Russian oil producers are postponing tenders due to a lack of buyers and as importers in Europe and Asia reject Russian ships amid widening disruption from a raft of sanctions imposed on Moscow over the war in Ukraine. The West and many other nations moved quickly to impose sweeping sanctions against Russian companies, banks and individuals following Russia's invasion of Ukraine last week. Moscow calls its actions in the neighboring country a special operation. Oil producer Surgutneftgaz has added an additional 80,000 tons of Urals oil to its March loading schedule at the Black Sea port of Novorossiysk and offered the cargo in a tender, traders said, although previous attempts to sell cargoes via tender have failed.
Most commodity prices remained on the boil on Tuesday as Russia's invasion of Ukraine escalated and Western sanctions disrupted air and sea transport, threatening flows of raw materials. Crude oil extended gains above $100 a barrel, gas prices rocketed 17% and wheat surged 5% on fears that logistics problems will result in shortages. Gold had eased when Russian and Ukrainian officials held ceasefire talks, but it rebounded 1% as safe haven buying resumed after there was no agreement. Next, we have the top news in metal markets. Copper output in Chile, the world's largest producer of the metal, fell 7.5% year-on-year to 429,923 tons in January, the country's statistics agency said on Monday. The Andean country's manufacturing climbed 2.6% in January, missing the market forecast of a 4.5% rise, while the unemployment rate for the quarter through January was 7.3%, slightly above the 7.2% seen in the final quarter of 2021, the agency added.
Palladium surged more than 9% on Tuesday to a 7-month peak as Western sanctions against Russia over its invasion of Ukraine renewed concerns over supply of the metal, with the elevated tensions also bolstering demand for safe haven gold. Used by automakers for catalytic converters to curb emissions, palladium jumped as much as 9.4% to $2,722.79 per ounce in the session and was up 6.1% to $2,639.19 by 10:41 a.m. Eastern Standard Time. There is tremendous concern that Russia, a key exporter of palladium, is going to face severe disruptions as the flight bans are going to impose a big trouble in getting supplies to different places, said Edward Moyer, senior market analyst at Oanda.
We will now look at the top news in the agricultural sector.
Palm oil has become the costliest among the 4 major edible oils for the first time as buyers rush to secure replacements for sunflower oil shipments from the top exporting Black Sea region that were disrupted by Russia's invasion of Ukraine. Palm oil's record premium over rival oils could squeeze price-sensitive Asian and African consumers already reeling from spiraling fuel and food costs, and force them to curtail consumption and shift to rival soy oil, dealers said. Crude palm oil, CPO, is being offered at about $1,925 a ton, including cost, insurance and freight, CIF, in India for March shipments, compared with $1,865 for crude soybean oil.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.